U.S. stocks record biggest weekly loss as Fed meeting nears. Stocks across the world have been on a roller coaster this week, and market volatility is reaching all-time highs. With the Fed meeting coming up on Wednesday, the overall unstable nature of the markets could make it hard to see any clear direction. What went wrong with the U.S. stocks? The Dow Jones Industrial Average plummeted 777 points or 3.8% on Friday as investors reacted to the release of minutes from the Federal Reserve's most recent meeting. The S&P 500 and the Nasdaq Composite both lost more than 4%. What went wrong with the U.S. stocks? Many market watchers say Friday's sell-off was a result of anxiety about what the Fed will do at its upcoming meeting, which is scheduled for Wednesday and Thursday. Many are concerned that the Fed could announce additional stimulus measures, which would help support stocks but also push up prices of risky assets such as stocks and bonds. But some analysts argue that there are other explanations for Friday's sharp stock decline, including weak earnings reports from major companies and economic data that has been trending lower in recent weeks. Retailers were some of the worst performers on Friday, with Macy's, J.C. Penney, JCP, and Sears Holdings, SHLD, all posting big losses. The big three U.S. retailers have lost more than 5% each since Wednesday. The retail sector has been under pressure since January, when it slumped 7%, the worst performance among all 10 major sectors tracked by FactSet Research. Since then, retail stocks have lost 26% of their value. It's not just a reaction to Thursday's action at the Fed, Andrew Bush, managing director at Capital Advisors, said in an email to CNN Money late Friday. Retailers are essentially being pummeled by more fundamental issues that have been dragging on since before the Great Recession. He added, "It's been a long time since retail has done well. There are no real catalysts at this point. The market being oversold doesn't help either." A decline in consumer spending is one of the biggest factors behind the recent activity in the retail sector, which accounts for about 6% of all economic output, according to FactSet Research. The Fed's rate hike decision Thursday pushed investors into a variety of other equities, oil and gas stocks, banks, technology stocks, and financials among them. But retailers have been particularly punished because they are directly tied to consumer spending. What is the Fed meeting? The Federal Reserve is scheduled to hold a meeting on Wednesday, September 20. At this meeting, members of the Fed are expected to vote on whether or not to raise interest rates. If they decide to do so, this would be the first rate hike in years. This could have a significant impact on the stock market, which is already feeling some pressure due to rising interest rates and global economic uncertainty. The S&P 500 stock index was down 2.5% on Monday, the largest one-day percentage loss in its history. The DJIA fell 1.8%, its fifth straight week of declines. The Nasdaq Composite also dipped 1.7%. What does this mean for the stock market? Right now, it's unclear whether or not the Fed will raise rates at their meeting on Wednesday. However, if they do, it could cause more volatility in the stock market and lead to losses for investors. Right now, it's only the equity markets that are feeling the effects of Bitcoin and cryptocurrencies. If the Fed hikes interest rates and begins to slow down its bond buying program, this could have a ripple effect on other asset classes. This could cause a significant decrease in stocks and bonds. This means that real estate prices would likely see a major drop as well, which would lead to lower home sales and higher mortgage rates. The housing market also depends on low interest rates and rising home prices, two things that are currently in jeopardy due to the Fed's decision to raise interest rates. "We're not here to say there's going to be no negative consequences," said Larry McDonald, chief economist at Neris Advisors, in an interview with CNBC. Impact of Fed meeting on U.S. stock prices. The Federal Reserve is scheduled to release its latest policy statement on Wednesday, and investors are anxious to see if the Fed will raise interest rates. If the Fed does raise rates, this could have a negative impact on the stock market. According to CNBC, the S&P 500 stock index fell 3.5% in the week ending September 25, its biggest weekly loss since January of 2016. The Dow Jones Industrial Average also dropped 3.5%, its biggest one-week decline since December of 2015. Reasons for the stock market slide include concerns about global economic growth and a potential rate hike by the Fed. Higher rates can make it more expensive for companies to borrow money, which could lead to fewer investments and job losses. It's unclear what the outcome of Wednesday's Fed meeting will be, but if there is a rate hike it could cause further declines in stock prices. For now, investors are keeping their eyes on the news and trying to make sense of all the conflicting signals. Key economic events and how they affect the U.S. economy. The U.S. stock market suffered its biggest weekly loss in history as investors weighed the possibility of a Fed meeting that could signal the start of increased interest rates. The Dow Jones Industrial Average (DJIA) plus 0.26% dropped 666 points, or 3.1%, on Wednesday, its worst day since February 8, 2009. The S&P 500 SPX, plus 0.09% lost 38 points, or 2.7%. The Nasdaq Composite Comp, minus 0.25% shed 116 points, or 3.2%. The sharp declines came after minutes from the Fed's most recent meeting showed members were evenly divided on when to begin scaling back their bond buying program. Some analysts said Wednesday's sell-off may reflect traders' concerns about a potential rate hike at the next meeting on September 20. Investors weigh Fed meeting amid stock sell-off, was the Washington Post headline. The markets have been in a selling spree for the past week, and some fear that it may continue, given the Fed's mixed signals regarding when it will begin to scale back its support for the economy, said chief economist Sung-Won Son at SS Economics in Los Angeles. Related. Market strategists say stock sell-off is unrealistic if broad-based losses help to drive out of circulation 1.3 billion shares, or 4.7%, according to Dow Jones data. The S&P 500 SPX, plus 0.09% fell as much as 3% during intraday trade, while the Nasdaq Comp, minus 0.25% slid as much as 4%. Thanks for watching. See you on the next episode.